Jeff Bezos just invested $160 million into a tiny biotech company that's developing a groundbreaking new therapy. What is this technology? Why did Bezos invest so much? I'll explain this first. Here's something unique. Investors still have an opportunity to follow Bezos. Leave a stake as a tiny company before it makes early investors like it sounds too hard to believe. Please just wait until I show you what's inside 140 patents this company has filed. Company insiders know what's about to unfold. Over the past few weeks, they have been buying up $4.8 million in shares. And institutional heavyweights like BlackRock, Vanguard, Goldman Sachs, and Charles Schwab are tripping over each other to get in as well. They poured over $31 million into this small firm.
All right, welcome back to Yahoo Finance Live. We're less than 2 minutes away from the opening bell here on Wall Street on this Monday morning. We've got NASDAQ futures higher, S&P and Dow futures both pointing to lower opens. All three majors, of course, hit record highs on Friday. But over the weekend, we continued to learn that the outbreak of COVID across the country continues apace. 13% is the test positivity rate over the last 24 hours. That is still right around the highest that we have seen since back in May. The 7-day average of positive tests as well as daily hospitalizations, those both remain at records as we continue to see the spread of COVID across the country. And a theme we've talked about a lot here on the program in the last couple of weeks, and what I'm sure we're going to talk about in the next few years, is ESG investing. And we continue to see, Julie Hyman, investors coming in and agitating for change, and Exxon now the target of a new activist campaign. And it comes at a really interesting time, not only for ESG investing, but for Exxon's corporate history.
Yes, most definitely. I mean, Exxon, you could argue, is at an inflection point here. The share's down some 40% this year as we've seen oil and gas prices fluctuate. It's down a little bit more this morning. This company that's agitating for change at Exxon is called Engine Number One. It's actually a new company. It was founded by a guy named Chris James, mostly to actually manage his own wealth, which he has gotten through the technology industry. And it has focused on some renewable and ESG plays, but the issues that they outline in a letter to Exxon go far beyond sort of refocusing on renewables. It has to do with operations. It has to do with the amount of debt that the company is carrying. And Brian Sozzi, it has to do with changing the board complexion here as we look at Synchrony ringing the opening bell there at the NYSE this morning, Brian.
Right, Julie. At first blush, you think Exxon has an absolutely tremendous board. There are some serious, really some well-known business leaders on this board. Ursula Burns, Ken Frazier, Douglas Oberhauer. He was a former CEO of Caterpillar. Sam Palmisano, former CEO of IBM. But this note from Engine makes a very good point. I think a lot of boards can learn from. Just because you've been a top-flight CEO somewhere else, you may not bring a lot of great relevant experience to that company. So this particular letter is saying they want 4 new board members on the Exxon board with actual oil field experience. Go figure. Exxon should have a member on its board besides the CEO, Darren Woods, that has oil field experience. I don't think that's too much to ask for, especially for a company the size of Exxon and that has that prominence out there in the markets.
And I think another thing with this letter too is, we've talked on the program before about how this cycle is so compressed in terms of the market bottoming and then the bull market returning. Activism, of course, is, I'd call it like a midpoint part of a bull cycle, and we're beginning to see activism already here with investors. Again, thirsty cash is out there. They're trying to unlock value wherever they can, and going in, sending a mean letter to the board and saying, "Hey, we want some change." That is a tried and true method to attract a little bit of value here for shareholders. All right, let's take a look at how the market is trading in the first couple of minutes of the session. Jared Blickery joins us now for a look at how things are shaking out after the open. Jared.
Well, not a lot of big winners or losers here, but we do have record highs in the Dow, in the NASDAQ, and also the Russell 2000. Let's take a look at the indices around the world. Kind of a mixed picture, although NASDAQ is leading the way.
What up, Martin?
Follow that thirsty cash into the NASDAQ 100.
What's up, bro?
We can see Apple is in the green for about 0.5%, but the other big mega caps mostly in the red here. Alphabet's off about 0.5%, Facebook down 0.25%. But in the EV space, Tesla at another record high. Let's check out the last 5 days, and we can see up 8%. And market cap on this stock heading towards 550 billion, I believe.
And that's still
Let's
going on.
take a look at the sector action. We have tech in the green, everything else in the red. Energy, the biggest loser. It's always seems recently been one of the biggest winners or losers. To the downside, it's off about 2%. And just taking a look at our travel heat map here, we've seen some strength in the sector recently, but not today. We see looks like Hilton's off 1%. Southwest happens to be up 1%. American also in the green, but kind of a mixed picture. The cruise lines all in the red here. Well, let's take a look at our leaders, and we can see some of the ETFs we follow. We got Value, that's up 1.8%. TAN, that's a solar ETF. IPO, that's a Renaissance IPO ETF. So a lot of good sentiment indicators pointing towards strength in the day. Semiconductors, I'm just getting an alert. The SOX has hit a record high. Guys?
All right, Jared Blickery with a look at where things stand in the early going. Jared, we'll check in with you later.
Oh, look
on
at that.
in the program.
Home
Let's talk a bit
Depot
more
already
about
looking
everything
clean.
going on
I like
in the
that.
markets today. For that, we're joined by Ed Moldaver. He is the managing director at Rockefeller Capital Management and the founding partner of the Moldaver Lee Group. Ed, great to speak with you this morning. I'd love to pick up on something Jared was just talking about, which is the strength we're seeing in the value ETF.
What's up, everybody? I'm back. I haven't done this in a long time, but people have been asking me to do it, so I'm back. Streaming the markets once again. Let's see what we got going on right now. Let's see. So, I'm swing trading, of course, but let's see. I'm zooming on the daily chart just so I can get a better look to see what's really going on. So if you guys got any questions, you can always drop them down in the comments below, and I'll answer them in the order that they are received. Let's see what we got. So it's Monday. So people buy and sell, and I don't know, panic and do what they do on the weekends. So we got to see how the market reacts to all of that. What's up, Mod? I come to the stream because I see charts high. So what's the trade now? I don't know. I just started looking. I didn't look really over the weekend because the reason why is because I was seeing something that said what it said. It said some places in the United States was going to lock down again. So I mean, I didn't know what to expect, so we got to see how the market shakes up, because you got people that don't care anymore because, you know, obviously this has been going on for a long time, and then you got people who get scared and, you know, panic. So we got to see how that all plays out, but whatever happens, you just got to be prepared for it. I took out some stocks. I took out these three Friday, actually. I took out of gold, Becton Dickinson, and Teladoc on Friday, and I took those earnings and placed it in Dominion Energy and Home Depot. So let's see. Let's take a look at these two. I got in this one because even though I sometimes, you know, you don't want to. I mean, I don't know. Everybody trades different. Sometimes I don't try. I try to get the best entries I possibly can. But at the same time, you don't want it to be like too low where it comes right above it and they don't hit it. And then, you know, you wish you got in. So sometimes I just take that risk and get in. I'm not going to say too early, but early enough to get in. So let's see what we're looking at. Because if you look at it on a weekly chart, it looks good to me. I marked the support and resistance level. So I would get out about somewhere in this area. Maybe to be on the safe side, maybe here. And I got in at 77. I mean, I guess I could have waited here, but you never know that until after. So sometimes it's best to get in early. So you can't be too greedy. But it would have been a good spot. I got in right here only because at one point this was resistance level here, and it became a support level. So that was the best thing I could have done to secure the trade. So I got in this one Friday, so I just gotta wait this one out. Let's see what we got at Home Depot. I got in this one Friday as well. Let me check it out on the daily chart. See, this one, it's been doing the same thing for the past couple of weeks. Going up, down, up, down, up, down. So I just got in. Why not? Why not? I'll probably take it somewhere around here. What's this? Dividends. Let's see. So I do still have some extra money for a trade. I just gotta figure out what I'm going to get into. What is this one? Oh, this was some random stock I got into right here because it went up too high too fast. So I just did a short sell here. I mean, you know, it went up too fast. And then of course RSI over 70. So boom. Stop short selling this one. All right, I need to find something else to get into though. That's what I need to do. So I guess while I find something else to get into, I'm gonna unmute the TV so you guys can see what's going on. Caterpillar. So I'm not messing with that. Caterpillar is pretty good though, but I'm gonna wait this one out. I think I got an alert set for this actually, don't I? Yep, yep.
The British pound taking a tumble this morning on some Brexit developments. How many times have I said that phrase over the past several years? And yet here we are again. Tom Belger's joining us from the UK to talk more about what is happening, or maybe what is not happening in terms of negotiations there. Tom?
Come on, man. Let's get
Brexit
something.
really
Everything's
bursting
too
itself
high.
back into the headlines all
Let's
over
find
again
something.
over the past week. A lot of news, a lot of drama,
Close.
but certainly a lot of confusion still with just a few weeks to go until the end of the transition. The mood music last week was really pretty good. Sounded like negotiations were actually just a whisker away from a breakthrough on a deal. But then we didn't get one. Britain accused the EU instead of scuppering progress through 11th hour demands, seemingly driven by French concerns about negotiators giving too much away on the EU side. And the hope then was that a phone call between European Commission President Ursula von der Leyen and the British Prime Minister Boris Johnson over the weekend would finally move the dial. But that then didn't happen either. They spoke, but no progress in those conversations. And then finally, yesterday, a bombshell report that a deal had been struck on fishing rights. That's one of the key sticking points in these negotiations. But again, hopes quickly dashed because both sides are now denying that story. Instead, Michel Barnier, EU's chief negotiator, he's apparently gloomy about the prospects of a deal. So a huge amount now hinging really on a second call between Ursula von der Leyen on the one side and Boris Johnson on the other, that's scheduled to happen in only a couple of hours' time. And some sources now warning that if that call doesn't bear fruit, talks could collapse altogether as soon as today. So really high stakes now. And that's not both the pound and European markets today. Although it's worth saying the FTSE, a lot of the exporters there benefiting from a weaker pound, is trading pretty flat. So it says a lot, lastly, frankly, that ministers today are having to deny that a no-deal Brexit would mean Armageddon, because there's going to be serious
I don't know if I want to
economic
mess with
disruption
this.
if those negotiations don't bear fruit in the next few days.
Oof, suspenseful days once again. Tom Belger, be well. Thank you so much for that report. Appreciate it.
HP be having some good shares too, but I refuse to invest into them, man. I remember last time my computer broke and they didn't try to help me fix it, so they ain't getting none of my money. I want this. I actually want this one, but I gotta wait. Of course, the moment I take out, it starts to shoot up more. See how they do? See how they do? Oh, wow.
All right, welcome back to Yahoo Finance Live. Miles Udland here in New York. Well, as the world prepares for the rollout of COVID vaccines across the globe, Train Technologies is one company involved in helping get these vaccines to where they need to go at the right temperature. And for that, and for more on this, we're joined now by Mike Lamach. He is the CEO and chairman.
What's that man name? He said Train Technology.
By Yahoo Finance's Anjali Khemlani. So, Mike, let's just begin by maybe for our viewers who aren't as familiar with you guys, where you sit kind of in this process and where you are right now in, preparing and perhaps already involved in getting these vaccines where they need to go at the temperature they need to be.
Sure. Hey, Miles. First of all, thanks for having us here. Train Technologies, Thermo King business is the business.
I was waiting on the ticker symbol to pop up so I can look it up.
Food or vaccines or medicines around.
Or I can just Google it.
Cold
But
storage. It was invented 82 years ago by an African
just get too
American
lazy to do it.
And we've been innovating ever since. And we're in good shape. We had to really come up with a new product that would be able to get to temperatures at minus 84 to minus 95 degrees Fahrenheit. And that's the point where all organic decomposition stops, and it's the place where you can indefinitely freeze something for the long haul. So this is part of the preparation that we've been making over the past several months.
Mike Angeli here. Looking at the needs, we know that Pfizer has a greater needs for its vaccine in terms of cold storage than Moderna. Your experience with food is something that I think has been
It's gotta
brought
be in
to
here
the
somewhere.
fore.
Why is
Many
damn how this
pointing
went up?
to the food industry as
I was
already
actually looking at
existing
this
with cold
too.
chain. What is the difference though between
That's
transporting a
80% right
vaccine
there.
in this temperature versus
That would have paid
food?
my rent for the next 2 years.
Yeah, it's the quantity really. You're talking about 12 to 15 billion doses.
Every now and then you
in
miss
an
something
incredibly
like this,
short time.
man.
And what we did at the
80%.
time,
Man, you'd have been
somewhere
straight,
in the cold
man.
chain between harvest and the
Oh
time
well.
that it would be
I'll
on
get me
dinner
one.
table, you
The
can lose
Battle Time.
25 or
What's this?
more percent of that food loss. Well, pharmaceuticals would follow the same way.
I got into Pfizer back at $29, but I sold it when it hit 30 something. Somewhere in this area I sold it.
Time. So every single dose that can be saved, you can think about that as
Let
potentially
me see if
saving
I still got that
a life.
marked on here
So this is
somewhere.
what's
Oh
critical
yeah, it doesn't
about
show
that.
anymore.
And it's every point of contact.
LAZR.
It could be a truck,
And look,
it could be air,
I don't think I was looking at that one
marine, trailer,
last week.
small truck for last mile, and we run that whole gambit.
Oh man.
Mike, it's Julie here. What about other applications potentially? You said you guys
Well
developed a new
played,
product to
man.
deal with this particular challenge. Do you see any
Never
other
know when these
potential
happen.
uses
Never
for
know.
that product following the usage for the vaccine?
When everybody knows, it's too late.
Yeah, I think certainly with food, we
That's a
actually
good short
developed a
selling
product,
opportunity. Let
20
me see if I
years
still
ago
got that other
for
money in there right
transporting
here.
sushi grade tuna, and so the product was developed in Asia for in our business, manufactured there, and used for that purpose. And we adapted it by creating a more insulated container and adapting the refrigeration system to get and stay at these colder temperatures. It's also important to have the telematics, the ability to see what's happening in the cold chain. So not just the temperature, but that whole chain of custody and how the product is actually performing to anticipate if you're going to lose a unit or product, you can then service it before you would lose the contents of in this case, the vaccine, which would be critical to maintain. So it's really that development over the last few months that's been the breakthrough for
Did
us.
you get into that one, bro?
It was the missing part
LAZR,
of the cold chain.
laser, whatever you
These
call it.
mRNA vaccines are really what we're talking about. These are the vaccines that use ultra cold refrigeration. And I think we'll see more of these in the future. mRNA is still relatively new.
Just an IPO,
solution,
popular
and we'll be better prepared for further
for
distribution,
self-driving
whether it's
cars.
pandemic
Still
or any
not too
other
late.
use in the
Price is
future.
low. It's too low. It's too high for me. I mean,
Mike,
for
looking at
investing,
it from the
sure,
distribution
but for trading,
standpoint,
it's a little bit different, you
specifically,
know.
whether it's domestic across the U.S. or globally, what do you see in terms of your abilities? Is it the ability to transport these globally, and specifically, are you working with Pfizer on this?
We've worked with every pharmaceutical manufacturer to understand the requirements for temperature and humidity and how it will be transported and packaged. We've worked with every third-party logistics provider that's in that chain. And we're working with all the states, many countries around the world to understand their specific plans, including in the U.S. Operation Warp Speed, to be able to
That's nice, bro.
understand the break points in the cold chain, what possibly could go wrong, and make sure that we've got backups for distribution across that. So as an example, in rural areas or areas where there's not
But
enough
just swing
infrastructure
trading. This
or
swing
power
trading.
requirements, we're able to put generators in addition to the shore power requirement.
I mean,
to
I
make sure that we're
do
able to
have
keep
some
these
investments
containers
though. Like
free from ultra-low temperatures indefinitely.
some of them I do
That's
have.
important.
You know, I got a
In the US
couple investment
around,
ones,
equitable
and
distribution,
then with a
thinking
little bit of
about
extra
Native
money, I
American
just
tribal
swing
land,
trade and just keep
or
building up my
out
account.
perhaps in rural
Speaking of
parts
that, I
India
got
or
I got to
parts
check
of
my
the world
Robinhood.
that's
I got some
critically
money in that one
important.
too.
So we're looking across that spectrum and
I
working
gotta
with a
check that
number
one
of centralized
soon.
government healthcare systems and have provided super freezers to those countries in advance as well.
Mike, the last time we heard from Trane about a month and a half ago, you noted on a conference call that business conditions, you were seeing some improvement in the fourth quarter. Do you continue to see that even though really the global economy has slowed down because the virus has resurged? And then you have a pretty big investor day coming up on December 14th. What's your message going to be to the street?
Well, the first part of your question is 20% of our business is moving transport refrigerated goods, the Thermo King business. The other 80% is the Trane business, and it's largely commercial. So we've been busy with indoor air quality. If you think
Check
about
out
the other side of
Southwest
the COVID
Airlines.
crisis,
Look like it's
been
trying to
around,
come back.
conditioning indoor air and improving the quality of that air, of that environment, making it healthier. And so
I
the
don't trust
activity on
nothing
the
right now.
train
I ain't falling
side
for that
as
trap
well
no
as the
more.
booking side has kept us quite busy helping customers with assessments. But what we'll look at on December 14th will be our longer range plan, how we wanted to reinvent train technologies. Even though we spun off our industrial business, which is now combined with Gardner Denver to form Ingersoll Rand under a new company, under a combined company, we took the opportunity to think about train technologies as being the IPO or the startup. And so we'll talk to investors about our view to how we clean sheeted and blueprinted the company from the ground up, and what we think the growth and margin potential could be going forward.
All right, Michael Mock is the CEO and chairman at Train Technologies. Mike, thanks so much for joining the program today. Hopefully we'll talk in the future.
Stay safe and well. Thank you.
All right, coming up, we're going to have a lot more here on Yahoo Finance Live, and we're back right after this short 2-minute break.
Well, it has been a big old Wall Street forecast raising party going into 2021, and Goldman Sachs is, I guess, joining that party or rejoining the party, because Brian Sozzi, they came out with.
I'm gonna set an
forecasts and
alert
then,
right here.
they're
I like
already
the way this
revising it
looks.
upward?
I don't know how long it's gonna take for this.
Julie, this team is tripping over themselves
get
to
close
one up
to this
each other
price,
to raise
but-
their forecast. So this morning you had Goldman's chief economist Jan Hatzius come out, raise his 2021 GDP estimate to 5.3% growth to 5% growth. Really, with some of the highest targets on the street already, but why not just go even more bullish with the stock market completely melting up? Now, at the same time, Goldman did come out this morning and also reiterate their S&P 500 4,300
If
target.
that comes around here,
I
I'm
love
in.
seeing these price
Just gonna
targets.
wait it
Really,
out.
that is one of the most
Oh, let me
aggressive
make sure I
targets out on
did
the
it right,
street.
actually.
But why
McDonald's.
Hatzius
Yep, I did it
is
wrong.
upgrading his GDP estimates ultimately boils down to his view on savings. He thinks most consumers have saved up a lot of money during the pandemic. They haven't gone out to eat. They definitely haven't gone to the movies. And he thinks once consumers get vaccinated, they will take that spending and work it down. Go on a vacation, maybe to go buy something in dying Macy's. Who knows? They might have the cash to go out there and spend. And as we all know, consumer spending powers the economy.
Yeah, I mean, you know what? The the C part of the GDP equation, right? Consumption. I think it's 67% of all that growth, and it doesn't take a genius to say that people haven't been able to spend as much money as they would like this year. And I think that's the important part too. We still have 10 million people that are out of work relative to where we were in February. Hopefully, Congress continues to assist businesses in getting some of those folks back.
What's
to
up,
work.
Akash? Please do more of these, Skeet. All right, man. I mean, I didn't know a lot of people enjoyed watching this. That's why I haven't done it in a while.
I
But
think part of it is people.
I guess I'll try to do it, bro.
Because of the recession, but the rules say you can't spend your money in certain places. And I know that spending has been made up for with, it's been a goods over services type recovery, but look at what's happening in California right now. People want to go to establishments that are not allowed to serve them either at all or in certain settings or after certain times. And all of those changes, you can see it here in New York City. Restaurants and bars closing at 10 p.m. It's ridiculous. Like that's next year, if restaurants and bars are open regular times, that's like 6 additional hours that there can be service for consumers who have
try XRP. What up, Vaughn? I wasn't
are going to be,
I was inside of XRP. I was big in crypto back in 2016.
This is where the
I've been in crypto since 2016, and I stopped really this year, only because of the virus. But the only reason why I did is because I was in Bitcoin back at $900, sold at 20,000. Like I've been in all of that, and then when this happened, I don't know, it's just started getting too volatile, man. I wonder if I can pull that up on this chart.
I've got thirsty cash.
Nah,
and
I
I'm ready to
can't.
spend
But
it.
yeah. So
Not me after 10 p.m. I'm in bed already, Miles Udlit. I am curious how sustainable the saving trend will be as well. If we'll see any sort of
I might get back in. I don't know, man. Like that was before I was into the stock trading though. Like I invested, and then I would get into the crypto and just constantly trade.
Campaign at Exxon as well. We'll be right back.
Let me see if I can find some earnings report. See, I'm trying to find. I mean, a lot of these things are like probably after market close, though. Let me check. All time not supplied. Let's see. Last month, 22 cent. Now I'm in 62 cent. It's getting big. Yeah, I just sold my Ripple actually. Bro, do you ever try Deep Web for Bitcoin trading? Is that the thing when you open up Google, like a Google browser, and it runs in your browser? I think that's what you're talking about. Because I think I did something similar to that before. If that's what you're talking about. I think I might need to move my chat box for y'all. Hold on. So you guys can see. Let's see. I'm gonna move my chat box so it won't be in the way. I'll move it about right here. Actually, I'll move it right here so you guys can see. I see. What do y'all want to see the most? My alerts? I guess y'all want to see my alerts. So actually, I'll just put it on the side. There we go. What do we have? Nothing that I know. I probably just gotta wait. Sometimes on Mondays, when the market shakes up, you don't know which way it's gonna go. So you just gotta wait it out. Deep Web looks unsafe for me. unless you find a legit dealer. I think you were talking about the thing where you just when you surf the web and it mines Bitcoin. Is that not what you're talking about? I don't know. Actually, I haven't tried that, bro. I haven't tried that. I thought you were talking about it's a one Bitcoin mining browser. I can't remember what it was called, but that's what I thought you were talking about. There's a lot of earnings coming out today. Hey, if you guys got any questions, just feel free to ask them in the chat. I'm just looking around right now. Fubo TV. I haven't seen this one for a while. Game host. Isn't that the thing where you play games on other people's computer? I can't remember. I'll look at it. What is it called? GHFF. Rackspace. I'll look that one up actually. No, that went positive actually, and I need something that went negative. I need something that went negative. Let's see what this is. Neonode. Lyft. No, that didn't go negative. Sharp Spring. I don't even know what that is, but I'm gonna take a look actually. What's it called? SHSP.
Is your agency using WordPress to build websites? That's like carving a chicken with a handsaw.
No doubt about it. U.S. stocks are expensive relative to their own history. Whether you're looking at a PE multiple or price to cash flow, price to book, et cetera, they look pricey. However, I don't think you can look at valuation in isolation or in a vacuum. You have to look at it relative to the alternative. And when you pit, say, dividend yields on the S&P 500 relative to the 10-year Treasury, or if you look at an earnings yield, if you take that PE and flip it upside down and compare earnings yields to bond yields, actually the market doesn't
No,
look very
bro.
frothy at all.
There are
It looks
some hidden
significantly
marketplace
reasonably
which
valued
do
than you
some
did
really
in the
good
late
trades. You
90s
can
or
Google
even,
for deep
you know,
web.
in that mid 2000 sort of, you know, pre-bubble era before the
I mean, what I didn't
crisis.
used to like
I
trade
think,
it. What
you know,
I
a
used to
more
do was I used to
holistic
just
way of
I
looking
was
at
a hodler.
valuation
I had
is
two
the second
Bitcoin
way, and in
miners,
that
and I would just
regard,
let them
stocks actually
mine.
look
You
relatively
know,
reasonable. Now, admittedly, they look a lot cheaper outside the
because
US
I don't
than
know.
they do
I
in
just
standard.
enjoyed
But
Bitcoin
that's a whole
for what
different
it
debate.
is. So
So, you know, Chris, we're talking about this valuation question, but I think, you know, maybe the simplest frame here is something you say right at the top of your outlook for next year, which is this is the beginning of a new bull market for the stock market. I think a lot of people have come around to this view in the last few months, but it was a lonely place to be for a little while to argue that this was really something more sustainable. Are there parallels in your mind to the way the market behaved at the beginning of the post-crisis, you know, rally, and are there differences, I guess, between these two market moments, at least as you kind of see things evolving in the next, let's say, 3 to 5 years?
Yeah, that's a great question too, Miles. So first of all, I do think there are some
I
parallels.
think I'm gonna take this one out,
And
but
one
right
of the
here.
things that we're seeing right now, it's not as dramatic as what we witnessed in, say, March of 2009. But we'll see whether
Call
it
it
plays
even.
out. One of the
That's a
things we're
good spot
seeing
for
is that
me.
more
I'll take
cyclical
it all
business
day.
models,
133 to
the business
150.
models that really depend on global growth,
I'm good.
you know, rebounding in order for earnings to grow. Those
good.
companies, and
Let
you
me
could
take a
put
better
small
look.
caps in that category. In some sense, you could even put financials in that category because they're really highly dependent on, you know, the shape of the yield curve and the level of interest rates. Those companies have started to see real relative strength recently. And that is very, very reminiscent of what we saw in, you know, Q1 and Q2.
I used to mine Bitcoins in school system, Cyber Cafe. My local area made $200 for 1 year. That's not bad, bro. That's not bad, bro. I'm good. I'm good with that, man. That's see people that don't know crypto don't understand
biggest cratering in jobs that
what
we've
$200
seen,
is.
you know, since the Great Depression.
You know, because I used to use a
In other
website that
ways,
mined Bitcoin for
you know,
me
you could argue,
for free.
you know, you look at the U.S.
And
manufacturing PMI that came out last week. You know, we're back
you
to
know,
almost 60 again. You know,
but they went out of
55
business
right now,
now.
whether you're looking at
But
the
they used to pay me out in
manufacturing.
Bitcoin, and I had
So, you know,
Bitcoin
and it took a
mining
long
machine
time
too.
for
So
PMIs to really recover coming out of 09. So in some ways,
good.
you know,
What's
the
this right here?
economic
Sex
cycle was
testing
more
of
severe in
females.
2020, but in other ways, probably more transitory than what we saw in, you know, 2008, 2009. But from a market perspective, I think the playbook is pretty similar.
I need something
Another way to
important. This
look
ain't
at it,
important to
this
me.
boggles the mind to think about it, but in March of this year, we had something like almost a 40% correction in the S&P 500 in like 40 days. If you annualize it, that is the sharpest drop in the last century in the stock market. So you basically had your year and a half or 2 years of a cyclical bear market. You had it in like a month and a half. And so therefore, once I started getting my head around that, I started realizing that, you know what, this isn't the beginning of the end of the economy or the market. It's actually the end of the beginning. That what we've seen, in Q2 and Q3 of this year is actually the beginning of a new cycle. And that cycle is going to be driven, in our opinion, not only by monetary accommodation like it was in the GFC, but also increasingly coordinated fiscal accommodation along with that, which could make this new cycle pretty powerful.
Same thing.
Chris, a lot of folks internally here, but also on the screen, really continue to look at an S&P 500.
Bro, have you heard of news about PayPal? I heard about that. Soon we can buy Bitcoin using their platform, which is super good news. I don't think I want to invest in PayPal. They banned me when I was 7 years old.
On the S&P 500.
What's the Damn, I wish I could just look it up, man.
Well, that's a very provocative point.
Let me see if I can just search for it.
I would say,
right here.
Our base case scenario is not quite as bullish as Goldman's, although it is,
I got banned from PayPal
but
when I was
how
young.
you get to that 4,300, or to your question, how do you get to 4,400 or 4,500? It has to come in earnings surprises. Because to our earlier point,
we already missed out on that bubble anyway.
Really can't expand a whole lot more, right? Whether we could split hairs and talk about whether you want to put a 23 or a 25 multiple on trailing earnings, but nonetheless, historically speaking, you have very little room to rise. So where you're going to have to get that is you're going to have to get that through earnings, surprising to the upside. Right now, the consensus is about $165 for next year. I think that consensus is going to end up being too conservative. And the way you get to like a 43 or 4,400 is you're going to have to assume that you get about $20 to $25 more earnings next year than what the market's expecting. And
there ain't much going on right now.
Some of the ways that you've talked about on this program, before I came on, the idea that you've got a lot of
something to
pent-up
crash
consumer
or
demand, that the savings rate's high, and maybe some of that spend comes in 2021. And we saw consumer confidence numbers come out very recently in the U.S. and they're very strong. So that some of that pent-up demand is there when things, hopefully normalize with the vaccine.
What are you guys looking at in the chat? Let's see what y'all talking about. Let's see what this looks
Chris
like.
Konstantinos, thanks so
I
much
don't
for
really
spending
like
some
these
time with
little
us
ones like
this
this.
morning.
Let me see what
Riverfront Investment Group Chief Investment Strategist. Well, maybe the way you get there in terms of juicing an individual stock price is an activist campaign to make some changes. We are seeing such a campaign this morning occur with Exxon, and the activist is called Engine Number One. It's a newly formed fund founded by Chris James, who was previously a technology and is still a technology investor. Now, their stake in ExxonMobil is relatively small. It's about $40 million, according to the Wall Street Journal. But it looks like they have the support of CalSTRS, the California State Teachers Retirement System, which has a stake in Exxon of about $300 million. Just for perspective here, the total market cap of Exxon is $100.
All right, let me check on my alerts.
So
Let's see.
Still relatively small, nonetheless noisy enough. Campaigns like this tend to make a difference, and they are agitating for changes.
What I did was the
board,
past
we were
few
talking about
weeks
earlier,
really
Engine Number
was
One pointing out that while
I went through a lot of different stocks
at Exxon,
and what I
they
did
don't have
was
energy experience. So they're making 4 recommendations for people to
I marked up some charts on the weekly chart
but they're also
to set
talking
some
about investing in
alerts.
renewable energy,
So when it hit
and
around
what
a
they
certain
call
price,
realigning
I'll get
management,
like an alert to let me know that it's getting
There's
close to a
more
price
debt
where I
at
want to
Exxon,
buy
as they
in
point
at.
out. The company's
So
underperformed.
that's what this
potentially
list
a
is
lot
on
of
my
things to
left.
fix at ExxonMobil, if you look at what's going on there.
I'm a patient guy, so I
Miles,
don't
why don't I
like
start with you
rush
on
anything. I kind of just wait
what
it
you
out.
make of this
Damn, I missed
campaign?
this one, huh? I didn't know what to
I
expect.
think you effectively.
I should have just went in on it though,
quintuple
but I thought I was
your
gonna come
money
back
by
here.
getting CalSTRS on board.
I
You
guess
take your
anytime
$40
it
million stake
touches
and you actually
the
turn it
resistance
into
is still good.
$340 million stake. But
Oh wow.
look, we talked about this in the last hour. Exxon shares, they've not had a very good year, right? We're looking at the stock over the last month. It's up some 25%.
Big
We know
lots.
that
I got this
XLE,
one mark. I was
had
patiently
one of
waiting
its
for it to
best
come down and
months
touch
on record
43.
back in
Touch
November,
43,
but it's
I'm
up
in.
40% so far this year. And I don't think that anybody anymore has any disillusions about where the oil and gas business is headed. It is in secular decline, and I think it would be better probably for the future of the planet if these companies did not operate and sell the kind of products and that burns the kind of fuel the way it does today. I don't really think that most people believe that's a sustainable type model. And it's an interesting letter from Engine Number One, because on the one hand,
I wasn't this, but
arguing
I sold
that
it.
Exxon needs to be
So,
investing in what the future
I was hoping
of
it's
the
gonna come
enterprise
back
looks
down.
like for
I guess
Exxon. And
we'll
that,
see.
of course, I think is going to involve a business that looks quite different than it does today. On the other hand, they're
Oh, look
also
at this.
saying,
This one
Brian
looks like it's getting
Sazzi,
close.
that the capital allocation has been poor, that the capital that's been
Wow.
spent
Just
investing
need
in,
another dollar.
let's call it steady state oil projects should have
If I can get
been
another
returned
dollar, I'll be
to
all right.
shareholders. And so it's not a fully green
Just gotta wait it
proposal.
out.
It's sort
What's
of
this one
a little
says?
bit, Lynn Stout shareholder primacy on the one
Wow,
hand,
these are real
but
close.
still thinking about an ESG type future.
I'm waiting
for
on this
Exxon
one.
the other.
I know this white line I'm at is kind of
And the next
greedy
share
though.
drop
Let me
here,
see.
Miles and Julie, is likely a dividend cut.
This
And
white
JP
line
Morgan
is
crunched
kinda
numbers
greedy, I
here.
think.
JP
I
Morgan
just
looking for less than
might
$10
take
billion
it up
in free cash flow
to-
next year. The annual dividend commitment from Exxon, $15 billion. Realistically, they're going to have to cut the dividend. JP Morgan expects it. It's long overdue.
62.
Yeah, and that then could trigger another further decline in the shares, since there are quite a number of investors who still hold Exxon just because of that dividend. So we'll see how that plays out. We will also see how the coming IPOs this week play out. As we've been talking about, going to be a busy end of the year, probably a record end of the year for IPOs. DoorDash is one of those that is set to become a
It might don't go.
traded
I
company
think.
this
I
week.
don't know.
Ines Ferre
Let me
is
see.
looking ahead to that and looking at some of the
Let
analyst
me use
commentary
this to see what I can
around
get.
DoorDash. What are you hearing, Inez?
Well,
Nah.
Julie, we don't
I
normally
screwed it
get
up.
that many ratings before an IPO, but in this case, DA Davidson put a buy rating on DoorDash, basically citing strong recent market share gains, also adjacent revenue opportunities when it comes to groceries, for example, or retail, also putting a price target of $93 a share. But Fox Advisors has an outperform rating on DoorDash with a
62.26.
price
Let me
target
see.
of $100, and also talking about those
62.20.
adjacency opportunities.
I'm actually
when it comes to
gonna.
groceries, when it comes
I'll
to
buy that
delivery
at
of flowers,
62.26
expansion
actually.
outside the U.S., and talking about its
What up,
logistics
Chessis? What up,
network and
bro?
that it has
Just trying
value.
to educate
And
people.
then the criticism really has come
This one's real
from the
close.
research
Let's
firm
get
New
a little
Constructs.
zoom in a little closer
New
to it.
Constructs CEO David Traynor says that this is the most ridiculous IPO of 2020, really saying that it's reminiscent to the attempt of WeWork, saying that this business isn't viable to justify a $25 billion valuation. It's now a $32 billion valuation because they've raised their range. That the company really needs to increase its market share to 56%, that it needs to increase its margins, and also talking about the issue of profitability.
I'm gonna patiently
For the
wait for this
quarter
one.
ending
I think I'm
June
gonna go in
30th,
on
the
this.
company did report profitability, a profit of $23 million. But he's saying, look, it took a global pandemic to do this. You also, if you take a look at those GAAP numbers in the S1 filing, the company also noted some inadequate accounting processes, some material weakness when it came to its financial reporting. So a lot from New Constructs, a lot of criticism about this IPO as far as Fox Advisors. And
I might have actually missed
been,
that when it came
bullish
down,
on this
that
one.
little tip,
Considering the number of
but
public
it's
offerings we've
okay.
had this year,
I'll
calling
just
one of them the
try to
most
wait for it to
ridiculous.
come down
That's
again.
a high bar. We'll see if they end up being correct. Thank you so much, Inez. Appreciate it. All right, when we come back, we will be talking more about the company of the year, Zoom. We'll be right back.
got to keep my eye on this one. If I can get 20 more cents, I'll be happy, man. It's currently at 62.45. Once it hits 62.26, I'm in. I don't know how long it's gonna take for that to happen, but we'll see. What else am I need to look at?
Just a couple of weeks left in 2020, and Yahoo Finance has called it. Zoom is our company of the year. Of course, few companies defined the pandemic quite the way Zoom and its video conferencing software did. And we have talked here at Yahoo Finance to the company's CFO, Kelly Steckelberg, about how they handled the surge of onboarding during this time.
All right, chat. I'm still here. I'm just patiently waiting on I don't know if this is. I have so many different ones though, so many different stocks, but this is the one I think is the closest to my mark.
So,
I'm just waiting on it.
I think the day that Zoom was founded, we've taken a very
Oh, you know what? I think Zoom
and
messed up today. Actually, let me check.
capital that we have is not ours. It is our
Yeah, they did.
investors.
Let me
It
see what this
belongs
look
to
like.
our shareholders, and previously it belonged to the VCs.
Oh
and the
man, that's
investors in
crazy.
Zoom. And so we always take a very thoughtful approach.
That was an
to how we
earnings
invest.
report though.
In
That's not
fact,
bad.
Part of our corporate culture
That's
and
not
our
bad.
onboarding is to think about this. So in our offices, for example, on all the screens, always running as part of our kind of corporate culture slideshow, there's a slide that says, if you take 1 minute to think about spending $1 of your own money, take 2 minutes to think about spending $1 of Zoom's money. So we really want to encourage and empower everyone to be thoughtful about how we invest. And then, of course, we have a whole process and planning cycle around how we prioritize investments. We really focus on initiatives that drive top line growth. So R&D and sales are always a priority. And then looking at opportunities where we can be really efficient in areas like G&A, where we invest in automation and thinking about how we can avoid hiring if possible by doing things in a more efficient way. And I can't take credit for that. Like, that is embedded in the company culture, which is great because there's no way that I could do that on my own. It's really an effort that's driven in the entire company.
So you guys just announced your Q3 quarter, the 2021 fiscal year, and you saw $770.2 million in revenue. That was an increase of 367% year over year. And earnings per share were 99 cents. That was also a massive increase. I guess, when you look at that and you think long term, the comparables are going to get tough naturally, right? You know that kind of growth is
for sure
huge. So how do you then, I guess, temper expectations, right? Because we saw after the earnings report, people weren't satisfied with a 367% revenue increase, which, whatever that says. I guess where do you see the ability to temper that kind of expectation going forward when you've already seen this massive growth throughout the year?
So what we always say internally, first of all, is we can't control the stock price. What we can control is our own execution. So that's what we are really focused on. And thinking about what does the future look like? And part of that is around what does the future of work look like? We're spending a lot of time thinking about, remote work trends, this vision and strategy of work anywhere that I believe is really coming even in a post-pandemic era. And we innovate. We announced some great innovations in October.
I'm in Nicola, by the way, in case you guys wondering why I didn't get in when the bell rang right here. I'm just in it on my Robinhood account and not this account.
Things like voice
but I'm still in it.
and remote reception to help keep people safe as we start to
I
move
got
around
in
the
at
world again. We also
16 something,
have tremendous growth opportunity
1682.
in Zoom Phone, which is our cloud
So I'm
CX
just waiting. I
product,
don't
which is
know.
about a
I'm
year
just
and a half
looking at it
old
out.
now. So
Didn't really
very
set a
early
limit.
stages still with that.
I just got
We
in
see
it.
tremendous opportunity with international. International grew over 600% year over year in Q3, so it's growing faster than the US. And with the increased brand awareness that we've seen during this pandemic, it's really opened up markets that would have taken us years and probably millions of marketing dollars to get to, but we're able to go in and hire talent there directly now, which is really exciting. And then we have other brand new platforms and products that we announced again in October, including On Zoom, which is our event hosting platform.
If you guys got any questions,
And
feel
this
free to
is
drop them
creating an
in the comments below.
opportunity for really the probably millions of hosts that are on our platform every day that are running small businesses or doing things like fitness classes, and bringing them together with their attendees on a platform that provides a seamless experience for them. And it will also serve as a directory of events and a discovery mechanism, so that if you wake up in the morning, you're like, hey, I want to take a fitness class, but here I am in Queens and I can't go outside. How am I going to do that? You can look at On Zoom and you can find what's available in a time zone that works for you, and very quickly sign up and be in a class. And so all of those are creating tremendous opportunities for the way that Zoom's going to be integrated in our lives, even when it's safe for us to move around in the world again. And all of those have different aspects of growth opportunities ahead. So we're really excited about the future and what it holds.
I guess when you look at, you talk about how the brand awareness exploded, right? It was a big IPO. A lot of people were looking forward to it. But the average consumer might not have known, right? If they weren't working in an office at that point. And now, I was talking to my editor about this, and, she mentioned that people don't ask, do you want to get a drink? They go, do you want to Zoom? Yeah, we do that. My wife and I do that with our friends. Do you want to hop on a Zoom? And, Skype existed. Microsoft Teams was in existence. Google Meet was in existence. So it was Hangouts. It was whatever they were calling it at that point. But there were big name competitors. So, how do you kind of explain the way that Zoom went from, known in the enterprise space to this consumer service now, where originally it wasn't necessarily there, and how do you continue to go along with that?
So everything that we do at Zoom is focused on delivering happiness to our customers and our employees, and the way we do that from the customer perspective has really been focusing on ease of use as well as reliability of the platform. And so you're absolutely right. Before this pandemic, we were really known in the enterprise space and the B2B space, but not nearly as well in the individual or consumer space. And I think because it's so easy to use, as we saw schools start to adopt it, it's easy enough for a kindergartner to get on and know how to navigate around. It's also simple enough for grandparents to feel comfortable getting on and reading stories with their grandchildren. And so I think it was that combined with the scalability of the platform that held up and was there and able to serve the millions of new consumers and users that came to our platform in a very quick period of time is what led to that extreme growth and increase in brand awareness. Just to give you some perspective on growth, if you look at last December, we were averaging 10 million daily participants. And in the spring, we announced that had grown to over 300 million daily participants. And so in a very short period of time, we saw a dramatic increase in usage. And I think it's the scalability of the platform that allowed us to do that.
When you look, at the different types of usage, I mentioned you mentioned school. We're doing a separate breakout piece on Zoom and education, how universities have worked with Zoom, and then now it's K through 12. I think my nephew might use Zoom schools, and he's like 3 years old. So as you said, it is easy enough for kids to get on there and communicate through it. My poor parents have to do construction paper turkey hats for Thanksgiving for them, but still, it works. I guess with it's amazing. When you look at the telemedicine industry, that was something I think that felt very much still in its infancy until it was forced to grow up real quick, where people were nervous about going to hospitals because they thought they would get sick. And Zoom became something that a lot of people relied on to talk to their doctors. I mean, I used Zoom calls. My parents used Zoom calls for their own checkups. So I guess how did you see that developing throughout the pandemic? Because that was something that existed beforehand, right?
It did. So we absolutely, healthcare has been one of the key verticals that we have focused on for a long time. We support HIPAA compliance in both Zoom meetings and Zoom phone. And of course, that's what's really important to give confidence to healthcare providers to be able to talk to their clients and their patients and ensure that they're doing it in a very safe, secure, and private way. And that's what we all want to know, right? That we don't want to ever have to worry about the security of the platform when we're having these really sensitive, important discussions with our healthcare providers. And that's exactly what Zoom provides, combined with the ease of use that all ranges and ages of patients and clients can easily join a meeting.
And we are going to have coverage all day of Zoom. Again, Yahoo Finance's 2020 Company of the Year. A couple months ago, we were kind of soliciting internally, ideas for Company of the Year. And I believe my comment was, if it's not Zoom, then we're not actually doing the Company of the Year. But there is a company that I think people are thinking about as maybe it should be the Company of the Year. That, of course, is Tesla. We're going to talk to Rick Newman in just a little bit about why we did not choose Tesla as the Yahoo Finance 2020 Company of the Year. Maybe we'll get into a couple other non-selections in that conversation as well. All right, coming up on the other side of this break, we're going to have a lot more here on Yahoo Finance Live. Again, NASDAQ trading at a record high with about an hour into today's trading session.
We've been talking a lot about 2021 outlooks here on the program. We want to bring in someone who has a perhaps unique perspective on that question. That is Bricklin Dwyer. He is the chief economist at MasterCard. And I say that because, of course, there at MasterCard, you guys have access to a lot of spending data and you're constantly sort of crunching the numbers. You do spending pulse surveys. And so given that, given what you have seen in terms of how much people are spending, what they're spending on, you have invoked that sort of buzz phrase of pent up demand, right? So what does that the unlocking of that pent up demand look like in 2021? How's that going to play out?
Well, we've really seen some fantastic trends emerge during the crisis. It's been largely unlocking a lot of the existing trends that we saw before the crisis, and really amplifying those as we moved into the later end of this year. Those trends were, the shift to digital, which I know you were just talking with the CFO of Zoom. I mean, clearly these trends that we've seen emerge have been very real and very big. That shift to digital, which has been companies investing in digital, and also e-commerce, which has really jumped and leaped into the future of what we've seen. So we've seen, using our data, looking at information we see around the world, we see that about 20 to 30% of that shift to digital is going to stick around more permanently. And that really is at the core of our view and the core of how we're looking at the future. We see the initial spike where everybody goes online. And then now that everybody's kind of adopted this environment of, using Zoom for different things, using different platforms for different ideas, and trying to think about what does the world look like? How much of these new technologies can we really embrace and adopt? I'm sure all of you can see that in your own personal lives. And our expectations are that quite a bit of that will be sticky.
Bricklin, if in fact, consumers do go out there and spend next year and unleash that pent-up demand, really you and a lot of other folks are out there are talking about, what could GDP growth in the U.S. look like? Are you thinking it could be over 5%?
So there's a lot of factors to consider here. When we think about that digital transformation, we think about, the vaccine and other therapeutics and what they bring to the table. They really unlock that pent-up demand, as you mentioned. That pent-up demand, I think we can see it around us, where the retail economy has really recovered. The T&E economy still has quite a ways to go, but it's a bit more nuanced than that. We're really experiencing this multi-speed world. So, focusing on the top line number is really kind of missing out on some of these more nuanced trends. And those nuanced trends are that digital versus non-digital, the localized travel versus the cross-border long-haul travel. These are areas that are likely to outperform. And so we kind of break it down that way and look at what areas are we seeing a lot of momentum and growth, and what areas are going to take a bit longer to recover.
Bricklin, your colleagues on Wall Street have written a lot about the need for additional fiscal stimulus. I'm curious, given your vantage at MasterCard, how you saw that flow through spending in the spring, and if you have any estimate maybe, or a sense perhaps, of how much savings is out there, and what additional packages could look like, at least as they flow through on the spending side.
Yeah, it's a great question. And, something every time we get fiscal stimulus, I feel like we go back to the drawing board and figure out, what does this fiscal package mean? Because they're always so different in terms of the transmission channels, whether we're talking about direct payments, whether we're talking about loan guarantees. And so it really is a different construct each time. And this time around, it was no different. We went back to the drawing board to figure out, one, how are these things translating? We saw this big increase in direct payments to individuals, the stimulus checks that went out, and then unemployment benefits and top-up programs that we saw. Then we saw that interruption, and then the re-engagement as the federal government deployed additional stimulus. What was really interesting during this, as you point out, is that savings picture. Initially, we saw that big increase in people's savings accounts as that stimulus money went out. A lot of that money went out vis-a-vis electronic payments or e-commerce channels, which was fantastic to see that kind of momentum. And that really comes as an economy that had developed that capability over a number of years. So that was good timing in that sense, that we were able to really rise up and push a lot of that spending online. What's really interesting now is stimulus on the way in tends to really prop up consumer spending. We get that initial round of stimulus effect or growth effect. And then on the way out, we like to talk about the expiring of fiscal stimulus as more of a cliff, but really it acts as more of a slope. It gradually reduces over time because of that savings effect that you mentioned, where consumers do have different levels of savings. You may save more than me. And so that ends up smoothing out a lot of the impact of the expiration of fiscal stimulus. But make no mistake, we still are in an environment right now where we need more fiscal stimulus to really get us between now and when that vaccine and therapeutic deployment really happens.
Right. We need the slope to end later rather than earlier. Brooklyn Dwyer, thanks so much for your time. MasterCard Chief Economist. Appreciate it. Well, coming up next, we are going to be talking about Bitcoin's run and its effect as well on shopping. We'll be right back.
All right, welcome back to Yahoo Finance Live. Miles Upton here in New York. With the market rallying, we have, of course, talked about what's been going on in the crypto space. Price of Bitcoin today is trading back above 19,000. Let's talk a bit about what we're seeing in the shopping space and how crypto is impacting some maybe more normal habits that all of us have. For more on all of that, we're joined now by Alex Edelman. He's the CEO at Lolli, which is a web browser plugin, if I'm describing this correctly, Alex, that allows you to get Bitcoin rewards, essentially. I'd love for you to maybe just break down that concept for us and talk through some of the trends you guys saw through Black Friday and through the holiday shopping weekend that we saw a couple weeks back.
Yeah, and first off, thanks for having me. So we're Lolli. We've created the easiest way for many people to get into Bitcoin through shopping as opposed to investing. We have over 1,000 different retailers on the platform, and some of the trends that we saw, a lot of them were due to COVID as just a dramatic increase in online shopping. We saw across the health sector, fitness sector, a lot of holiday shopping. Places like Sam's Club did very well over the last month. But yeah, it's been wild. I think we have this convergence of things. We have COVID. We have the Fed printing all this money that's leading into all this interest in Bitcoin as a store of value, as a savings technology. And I think people are looking for tools like Lolli to use during this holiday shopping season.
Alex, Dan Roberts here. Now, obviously, the amount that you guys have given out in Bitcoin rewards, the value has certainly increased in the last year, thanks to the price of Bitcoin going up. If someone gets, X fraction of one Bitcoin as a shopping reward, it's worth more this year and right now than it was a year ago. And you guys are still a new-ish company. What I'd ask is whether you're hearing from your retail partners that they're seeing a behavior of shopping increase from those customers who care about Bitcoin and who use Lolli. That is, people are being driven to actually spend more at these retailers right now because they want to get the Bitcoin shopping rewards.
Exactly. And our users are what I think a lot of merchants will call like a savvy shopper, a very like, somebody who's like looking for the best deal. And they, when they're sort of looking for the best deal, they're looking at, do they use cashback? Do they use coupons? Or now do they use Bitcoin back when they shop? And so what we've seen is that over the last 2.5 years since we launched, Bitcoin has 4 or 5x'd from that time period. And so our original rewards that are averaging around like 7% are now, north of like 20%, 25% back. And so clearly our users are very happy because their rewards are 4 to 5x what they would have gotten if they had gotten points or cash back.
And Alex, let's zoom out a little bit. We're talking about this big Bitcoin rally we've seen in 2020. What we hear from most of our guests is it's very much driven by institutions. It's Wall Street names, it's firms that are buying in, they're putting a percentage of their portfolios into digital assets, into Bitcoin. And so obviously that makes it sound like it's very much not the retail investor, the regular, the average person, whereas in 2017, you really had an effect where because of all the media and the headlines, you sort of
American Airlines was my investment play.
Oh, what's this Bitcoin thing?
I invested into it a while back, but it took so long for it to come up. I didn't.
Because your customers very much are the retail investors.
Well, what happened was,
young people.
At first, I thought the cure. Oh, I guess I could. Let me pull up the chart. A better way to explain it to you guys.
Yeah,
give me 1 second. Let me fix my phone real quick.
From our vantage point, it is retail that is adopting it in the masses. I think that it's difficult to quantify or to see that because it's such small amounts relative to, billionaires like Michael Saylor, buying, hundreds of millions of dollars of Bitcoin. And we're not at that scale yet. But the way we look at it is investing is for
all right, I'm back.
A very small percentage of the population.
Had to put my phone on the charger.
So we're gonna see.
All right, so let's see. So thing about American Airlines chat is I'm gonna show you guys can relate to this. So when I invested into let me pull up the weekly chart instead. So when I invested into American Airlines, I invested into it around back here. Let's see. June, because I thought, I honestly thought the virus was going to be done by the summer, just like a lot of us did.
Alex, do you think that?
And it just dropped. I didn't pull out. Like, you know what? I'll just keep it in there as an investment play. And it took patience, man. It took patience, and I'm finally seeing daylight, man. It took so long, man. This is June, and I'm finally seeing daylight. But this was what they call trading with emotions. I mean, yeah, I didn't really look at support and resistance because I thought that the virus was going to clear up. I mean, a lot of us did. I didn't expect it to last this long. Most of us didn't. So,
is where a lot of the interest is.
But it took me this long to get out the red. But it's okay though. This shows you that when it comes down to trading, you don't really lose until you panic and take out.
Right now, in most major markets, the U.S. included, is people don't really want to spend their Bitcoin. Bitcoin is the greatest savings technology ever created. It's been the best performing asset over the last decade. Nobody wants to spend their Bitcoin. And so we look at right now this next phase of adoption happening with stablecoins, and stablecoin being a digital currency that is pegged to your native local currency. And so this next phase will be people spending stablecoins, and we believe earning Bitcoin. So think of Bitcoin as your savings account and your digital dollar or your stablecoin as your spending account over the next 5 years.
All right, interesting stuff. Alex Edelman is the CEO of Lolli.
It's
Thanks
crazy,
so much
man.
for joining the program today.
I don't know what I'm gonna take out at on this.
As well. All right, coming up on the other side of this break, we're going to have a lot more here on Yahoo Finance Live. Rick Newman.
Oh, that's the ask price.
Why Tesla was not the company of the year. Looking here at the markets,
the
Nasdaq
spreads
at a
are
record high.
crazy.
We're back right after this.
I don't know, man. I might. Let me see. I don't know. I guess I'll. I kind of want to take it out, just because I waited so long, man. I'll wait. So Brian looking so green.
As we've told you, Yahoo Finance today unveiled its company of the year for 2020. It is Zoom Communications. But as part of the discussion, we also like to be transparent and talk about the companies we did not choose. One of those, of course, was Tesla. It might have been a choice for many people. There are a lot of Tesla fans out there, to say the least. And the fans who like Tesla really like Tesla. Rick Newman is here to tell us why perhaps it was not our choice for company of the year. Zoom was my vote, to be transparent as well. But Rick, what was the thinking behind?
I'm gonna keep my eye on this. I'm gonna
So if you just look at stock price alone, Tesla beats Zoom. Tesla is up almost 600%.
Look at this a little closer before I make a decision.
While Zoom is only
If you guys got any questions, like I said, feel free to ask in the chat.
But there are a few things about Tesla that made us uneasy. I'll just go through these real quickly. First is the way they're rolling out their so-called autopilot self-driving system. There have been a number of deaths in Tesla crashes that were operating on autopilot, and safety investigators have linked at least a couple of those deaths either to a problem with the autopilot software itself or with drivers just being over-reliant on it, thinking that it does more than it does. No other car company's self-driving system is associated with any deaths. And Tesla has gotten a lot of criticism for rolling that system out too aggressively. And some people say Tesla really overstates what that system can do. So that is a safety issue, number one. Elon Musk, look, obviously a visionary, extremely talented, but he was kind of like President Trump on the coronavirus this year. In March, he said coronavirus will be gone by April. He said some other misleading claims. He also reopened his factory in opposition to county shutdowns in California. He risked getting arrested.
I think I'm just going to take it out.
Exactly model behavior.
Be happy with it.
And then number three is just the valuation question. Tesla right now is worth like 10 times General Motors and 3 or 4 times Toyota. And we just kind of scratched our head wondering, Tesla's not going to implode in the future. It's here to stay. But
there we go. I just took out. I didn't have a good entry in this one, but I'm finally in profit. So when you wait this long to get in profit, I don't know. I don't know.
Rick, I think this is the
it was just that time,
if I'm correct, that you've been involved in picking the Yahoo Finance Company of the Year. And, there's other companies out there. Moderna, another one, that stock's up 700% this year. Obviously, everyone's very excited about the vaccine. But as you think about what are the characteristics that define a company, that defines a year?
This one right here, I'm waiting on this one to react, man. Come on, let's go. We got things to do.
Why Tesla wasn't chosen, there's a lot there. But I guess in your mind, to go back to the positive choice, why Zoom? What is it about that business to you that says 2020?
We base this on a few things. One is just financial metrics. Stock performance is obviously one. And then financial performance, profitability, and is it sustained profitability, and is it one-time profitability? And then we also include some sort of editors factors such as
finally got out of American Airlines. It took so long for that to happen.
This was the year for Zoom. I mean, obviously Zoom was a huge pandemic play, but we made the assessment, you could maybe call it a guess, that Zoom is going to actually remain significant going into the future, even after the pandemic. We don't think people are just going to drop Zoom, that it's going to go away. We think things have actually changed, some things permanently, whereas some of the other pandemic plays, we did consider Peloton, we did consider Etsy, both had fantastic years, but we think those were more one-dimensional pandemic plays that don't really represent any kind of cultural change. And we did consider Moderna for vaccine reasons, but that's also kind of a one-time thing. And Moderna, obviously not the only company working on a vaccine. There are several others. So why single them out rather than Pfizer or some of the others?
Yeah, to me, from a pure zeitgeist perspective, Zoom, clear winner for 2020
And you guys,
in terms of really
some of you guys were
defining a year.
in these discussions, and we did ask ourselves, and Miles, you pointed this out earlier, if not Zoom, who else could it be, given that Zoom is now a verb? It has changed so many people's behavior, and it did take on big giants like Google and Microsoft and do pretty well.
Yes, good points all. All right, thanks so much, Rick Newman. Appreciate it. When we come
Bye, guys.
back, an increasing number of companies say that they are on the move for tax purposes. We'll discuss that next.
All right, we're about an hour and 25 minutes into today's trading session. The Nasdaq right now at a record high. The Dow and the S&P are both in the red. Well, as we all think about what the future of our jobs, our living situations, our lives has in store, Goldman Sachs is considering sending more of its employees down to Florida. Bloomberg reporting last night that the company is looking at a new Florida base for its asset management business. And Julie, this is a number of interesting tentacles here, not the least of which is how Goldman's business has changed. Right now they are sort of they're doing a lot more than just kind of regular Goldman stuff. They are now in the asset management. They now have
Man, this one came back. If you didn't take out here, you kind of messed up. I think it was up 80-something%.
As much in New York and having more financial workers down in Florida. Big change culturally.
Yeah, big change culturally. And obviously Goldman's not the only company making this kind of change. There are companies doing it, as in the case of HPE moving to Texas, and there are companies talking about it. Elon Musk has been making noise about moving out of California, and some of those reasons have to do with tax reasons as much as cultural and financial reasons, right, and recruiting reasons. But I mean, as I look at these stories, one of my takeaways is also like I don't want to live in Florida. And, so maybe there are enough of the Goldman Sachs employees who are happy to be moving there. But this also comes back to this sort of debate over the supposed death of places like New York or places like California, which people are going to want to live in for lifestyle reasons regardless, right? In terms of the energy of a place, the climate of a place. And speaking of climate, moving people to Florida in 2020 at a time when we've got climate change, at a time when Miami floods on a near daily basis, I don't know if I would be making that decision.
Well, I think this boils down to you see a lot of these big corporate headquarter moves. Everybody says the right thing. Oh, we want to invest for the future of our company, but in a lot of cases, they just want to save money now so they can make an earnings number. Let's keep in mind, Goldman Sachs came out beginning of this year saying they want to cut $1.3 billion in cost. What better way to do that than trim the people that don't want to move to the swampy lands of Florida and lower your real estate taxes? This is one way for them to do this, Miles.
Well, and, friend of the program, Mike Novogratz, also commenting on this story as well. And his point was, if you want to tax wealthier people, like the folks who work for Goldman Sachs, you have to do it at the federal level, right? Because now there's a tax reason for a lot of Goldman employees to want to move to Florida as well, not to mention what part of the business they're in, lifestyle reasons. Get into all of the Florida versus New York things at some point, but certainly we continue to see folks moving south in greater numbers. All right, for Julie Hyman and Brian Sozzi, that's going to do it for us on this Monday morning. We'll be back tomorrow, 9 o'clock Eastern. Zach Guzman, Kiko Fujita, going to have you for the next couple of hours here on Yahoo Finance Live.
Welcome to Yahoo Finance Live. I'm Akiko Fujita along with Zach Guzman. Happy Monday to all of you. We are seeing all three majors a bit of a split picture right now. The Dow and S&P 500 slipping after hitting those record highs last week. The Dow right now down about 144 points. The NASDAQ up 53 and the S&P 500 trading pretty flat down 4. Utilities and communication services seeing the biggest gains in terms of the sectors. A make or break week for Congress. Lawmakers look to hammer out a stimulus bill ahead of a December 11th deadline to fund the government. IPO bonanza, Airbnb and DoorDash both raised their price ranges ahead of planned listings this week as the market looks to end a red-hot year on a high note. and zooming past the competition. Our company of the year making a huge splash with so many of us working from home. You'll hear from the executives who made Zoom Communications the most successful company this year. And yes, that stock is up more than 500% year to date. A lot to get into on that front, but let's begin this hour with the coronavirus pandemic. We've got 173,000 new cases reported on Sunday, just over 1,100 people reported dead. And Zach, it feels like every Monday we're at this point where we've got these sobering numbers coming out, sort of taking us back, despite all of the optimism around the vaccine, to where we are in this reality right now. It's been an interesting weekend for me here in California because we had those new restrictions go into effect last night. A number of new restrictions or new elements to look to. We're talking about retail now operating at 20% capacity. All outdoor dining shut down, at least in Southern California. And it feels like there is this growing debate right now, partly because of this fatigue around the pandemic about who actually should be allowed to operate in terms of businesses. And a lot of restaurants, small businesses, very upset with this latest order because they are certainly struggling and they were trying to make up some of the losses in December.
Yeah, and you think about the optics of all this too, right? I mean, it was one thing when we saw this kind of happen back earlier in the spring when there was that support and kind of momentum in Congress to get PPP through and the hope that that support was on the way. I mean, this time around, we've seen talks in Congress drag on for so long, and now just a week here to really expect some of those discussions to amount to compromise. And we'll see what happens here. But without that, it seems a little bit more drastic to be talking about these lockdowns yet again, especially now having experienced how bad it is for some of these restaurants and small businesses you're talking about, just in terms of the drop off in business activity that we saw when we did have those lockdowns go into effect. To be returning to them, I mean, it's obvious as to why a lot of these businesses might be hesitant to really follow through on some of those things. And you can talk to that better than I can now being out there in California, because we're hearing reports too, including my old hometown there in Orange County and some sheriffs saying that they won't necessarily be responding to some of those calls to enforce the governor's lockdown measures and really make sure that people are adhering to those things. Are you starting to see some of that tension out there right now?
Yeah, no question about it. We have seen a lot of these videos, for example, circulating on social media of restaurant owners.
Just bought Best Buy. It looks so juicy.
The governor's
I had no
order, but
choice.
also the mayor here, Eric Garcetti, who has essentially said,
juicy.
look, on the one hand, businesses or
see what happens.
restaurants need to close or shut down their outdoor dining. At the same time, he's still allowing filming crews, for example, to
Best
continue
feeling
with
is
their
when you get into a
operations
tray
because
at a
they are
good spot
deemed
and you're
essential
already in
business. An
profit.
interesting case to be following here, the California Restaurant Association suing public health officials here in LA County, saying you need to present the science here that says this spread is happening as a result of outdoor dining. And so a judge here in LA has said, yes, in fact, public health officials need to present that. That's something to be following here as well. But, you know, it feels like this is a debate that's happening in every market that's out there. We were talking about New York City a few weeks ago when schools were initially shut down, but bars, restaurants, and gyms were allowed to continue to operate. So, you know, this debate is certainly going to continue, but we are reaching really what is a critical point. And I think it's worth pointing out, Deborah Birx, who has been coordinating the White House coronavirus response, came out over the weekend saying this is the worst event that this country will face, not just from a public health side, but overall. And that seems like a pretty grim warning given where we already are right now.
Yeah, not only that, but also, I mean, we'll dig into this later on in the show, but there is kind of this weird divide when people are expecting the vaccine is going to be coming, and you look ahead to that. But still, we'll get into the model, but more than 500,000 deaths still expected by the time we get into April. So clear reasons as to why we still need to adhere to these restrictions, wear masks and everything else. But, you know, our next guest, Akiko, can talk to that far better than I can in terms of the doctors we'll be discussing it with today.
Yeah, let's bring in our doctor here. Dr. Stephen McDonald is an emergency medicine physician in New York City. Dr. McDonald, it's great to have you on today. I was looking through some of the numbers in the city right now, or New York State as a whole. We've got case counts, hospitalization rate, the deaths, all up roughly over 80% over the last 2 weeks. When you look at the specific city in New York City where you are obviously operating, what do you think has contributed to this sudden rise?
It's a great question. So far, Governor Cuomo seems to be calling this living room spread. So these are the small gatherings that you have at your home, in your living room, where you're with close friends or family in your quote unquote pod. But, if people are sharing pods or have not the same number of members, the spread can run rampant.
And Doctor, I mean, the other thing that we've been talking about specifically when it comes to New York was kind of the schools reopening, and that being clearly in focus here. We've heard kind of back and forth on the idea that schools might be something that people should be concerned about when it comes to community spread. What's been your diagnosis on the way that that's been handled there in New York, as we've seen kind of the start-stop being discussed?
Sure. So, it's difficult when New York City schools are controlled by one party, the
so
mayor,
look at that.
and schools
Okay.
on a statewide level are controlled by Governor Cuomo. And so, it's frustrating when you see schools closing, but then indoor dining remaining opening, which is obviously a much bigger
That display
important in
just
terms of
got
spread.
executed, in case you guys
I think
wondering
it's
what
good that
happened.
We're getting the students back to school and hopefully doing it safely this week.
And Dr.
This one
McDonald,
just
I
got
wonder if you can
executed.
speak to the very issue Zach and I were talking about right now, about which businesses should be operating, which should not. If you talk about dining, indoor dining certainly has been a concern, especially in the colder months. But outdoor dining, based on the data that you have, the science that you know, how significant has outdoor dining contributed to the actual spread in this most recent surge we've been seeing?
Sure. So we know that outdoor spread is about 1/20th as risky as indoor spread. So you would think, outdoor dining should be a relatively
So
safe activity.
today I
That
got
said,
in
when
Best
you actually
Buy
look
and
at
Kellogg,
what constitutes outdoor dining in New
and
York City, a lot of these restaurants have put up
that's
structures
it.
that are questionably outdoors
I
anymore.
think I got.
They're
I
supposed
might
to
get
be
in
open
one
on at
more,
least one
or I
side,
might not
getting
get in
two
one
is
more.
best
I'm
for
not sure
ventilation,
yet.
and now we're seeing many that
Depending
are
on
actually
opportunity.
completely enclosed structures. So that does raise a question of what actually is outdoor dining any longer, and how much is this contributing to spread.
Yeah, I mean, you can't really fault these businesses for trying to do all this stuff, since they had some time to try and get some of these things in place. And still, as I said earlier, still waiting to see what's going to happen on the PPP front. But when we talk about where this is coming from at a national level, since those numbers are important to discuss, and we saw, the first wave of all this was where you are in the Northeast. Then we saw it spread across kind of the Midwest here in the U.S. But now it seems like the Northeast is in a bit of a danger zone itself, since New York is seeing spread in the neighboring states. And we've talked about how states themselves are going to have to put in some policies to protect against neighboring states here. But how impossible is that when we think about how Americans are traveling, especially around the holidays, where state by state may not be the best way to look at the numbers?
This has been a problem throughout the entirety of the pandemic. I mean, New York State has had its quarantine list for some time now. And yet what we see is that, and what I at least see in the hospital frequently, is people come from other states. They don't adhere to the quarantine recommendations. They don't get testing on a recommended timescale. And then they turn out to have coronavirus and are subsequently infecting many New Yorkers with the virus. And so, these laws are very difficult to uphold and to enforce. So we really just have to ask people to please comply. It's begging, essentially.
Yeah, and we have heard that call from so many different leaders across the country. Dr. Stephen McDonald, the an emergency medicine physician practicing in New York City. It's good to talk to you today.
Likewise, thank you.
Let's turn our attention back to the markets right now. We are gearing up for what could be a very busy IPO week. Airbnb boosting the price range of its IPO ahead of its Thursday listing. The $56 to $60 a share range, valuing the home sharing company at $42 billion as investor appetite red hot in what's already been a record-breaking IPO year. Let's bring in Melody Hom, who is tracking the very latest for us on that front. Melody.
Yeah, and Akiko, it seems like these Zoom roadshows seem to be paying off, at least in terms of executives really pumping up further demand for a household name like Airbnb that already had seen a lot of interest, I would say, over the last few months, as this was probably one of the most hotly anticipated IPO of this year. To your point, stock is expected to price on Wednesday. Will start trading Thursday under the ticker ABNB on the NASDAQ. And this boosted share prices up from that $44 to $50 range. And on that fully diluted basis, going up to a $42 billion valuation. To be fair, some of the recent IPOs, whether it's Agora or Lemonade, have been criticized heavily for mispricing right before the stock goes public, nearly doubling in their market debuts. So when you see these sort of upped targets with both Airbnb and DoorDash, we should anticipate that perhaps there could be more room to run from here.
Yeah, and Melody, I mean, it's going to be coming out around the same time after DoorDash, and we talked about a lot of these names that are pretty well known when it comes to the consumers out there. They interact more directly. Earlier in the year, we got a lot of those B2B names coming out that some people who watch the show may have never heard of before. And it also comes at a time when we were debating direct listings and whether or not some of these giants would go that way. We saw Slack do that. Now they're getting bought out by Salesforce. So I'd be curious to get your take on maybe that trend here in terms of what it says to get these major companies going out more in a traditional IPO sense.
Yeah, it's a good question, Zach. I think especially during a year that was sort of colored by so much tumult, so much uncertainty, we didn't really know if these IPOs would actually happen. If you kind of go back to even March, April, these businesses were hit very hard. There was a lot more scrutiny in play. And to be honest, even when we talked to Airbnb executives, they had initially said that they had shelved plans for an IPO for this year. Of course, that could be rhetoric. But I think in order to kind of drum up interest again, to really connect with investors, and to be quite frank, a lot of the Airbnb executives who normally were not accessible to us, they have been having a lot more off-the-record conversations, a lot more informal chats, because they want to be able to convince investors that this is a business model that is here to stay, that post-pandemic, some of these perhaps fleeting trends that people are claiming, whether it's living from anywhere, working from anywhere, being able to have these shorter term road trip stays, those will be part of our culture going forward. Same thing with DoorDash, right? DoorDash actually did really benefit, if you think about it, culturally speaking, from just household recognition, right? Being able to say, hey, I don't feel safe. There is someone immunocompromised in my household. I don't even want to go to the store to buy any of my groceries. DoorDash, of course, rolled out a lot of those new offerings, being able to get things from bodegas. It's not just a food delivery startup anymore. So to your point, I do think the direct listings will continue to be a trend. I do feel as though, particularly this year, that was not necessarily the smartest option for two of these companies that did want to feel as though they were maximizing the market opportunity. And we'll see how they trade. Again, I'm curious to see, in addition to both of these, Wish, of course, the retailer, Affirm by Max Levchin, those two are on the docket, as well as Roblox, that popular gaming company for kids. So December should be a very busy month. 2020 is not over yet.
Yeah, Melody, let's talk about the narratives that we're hearing from both of these companies, because that is part of it, right? Trying to sell that to investors. On the one hand, you could argue a name like DoorDash pretty much sells itself because we've all seen the growth in food delivery. Airbnb's kind of been an interesting trajectory throughout the pandemic. Initially, they saw a big drop off in demand. Now, to your point, we're seeing people renting up these spaces because they just want to get out of their house. In what you've heard from speaking to the company, what's the sense of how sustainable this trend is going to be, this work from anywhere trend, even when the vaccine comes to market and is available to the general public?
Akiko, what I think is fascinating about Airbnb shifting narrative, even over the last 12 months, is they initially, I don't know if you recall, were trying to launch their own airline. They had plans to launch their own media brand. There was this sort of overarching.
What up, Dominique? What up, bro?
As a lifestyle company, we have kind of
How you
looked
doing, man?
critically at some of those startups that have tried to do it all, right? Airbnb was on that trajectory. It's almost a blessing in disguise that COVID sort of forced a more conservative, stricter approach to the business model, right? And speaking to some of the executives and employees there, it's very clear they kind of scrapped anything that's non-essential, right? Any sort of pipe dreams, visionary plans, whether that is kind of investing more in the experiences side of things, whether that's investing more in China, whether that's taking bigger risks, right? They decided to stop and put all of those things on ice. So I think in investing more on these 28, what they define as longer term travel, which is 28 days or more at any destination, really, really harnessing and seeing where the customers are going, which is traveling by car in the safety of their own home. I think a lot of those sorts of diligent measures in order to invest in those sorts of opportunities, trying to really shape this narrative that being in your own home or being in someone else's home could be safer than interacting with randos in a hotel lobby. That's clearly proven to be a strong bullish case at this point. I do feel as though that has been they're hammering that narrative home that in the years to come, as people start to realize, okay, maybe we can start traveling again, business travel will come back. Ultimately, when you think about family vacations and leisure travel, I do think they are really betting on the fact that staycations, long-term weekends, getting a cabin in isolation, those will continue to be really top destinations and top ways for people to spend their time, even after the pandemic.
Yeah, and I mean, to your point here, in terms of showing that growth, it could be a blessing in disguise to avoid what we saw with WeWork and kind of how segmented that company was going out when they filed their S1. And the third quarter here filed in that S1 for Airbnb just goes to show the strength in, despite all of that uncertainty, still able to show that path to profitability. But Melody Hom, appreciate you bringing us the latest on that front. No doubt going to be a very busy week here on Yahoo Finance Live, folks. Before we go to break, want to spotlight a couple movers we're seeing in today's session, in today's stocks on the move, starting with Kodak. You can see there shares up more than 50% as we got an update there in terms of the investigation over the announcement from a government loan here that came earlier this year that was going to transform Kodak into a pharmaceutical supplier. It was a $765 million loan put on hold after there were concerns about insider trading around that announcement. But we got the update over the weekend. The U.S. International Development Finance Corp, DFC, says everything was handled above the board. And after all that drama, Kodak trading again where it was in 2017. Also want to spotlight Boeing shares here hitting a new post-pandemic high, trading to levels we haven't seen since early March off an upgrade at UBS. The firm upgrading Boeing to buy from neutral and doubling its price target to $300 a share, citing a number of positive catalysts, including the 737 MAX recertification. You can see shares there up more than 3% today. We're going to take a quick break here on Yahoo Finance Live, but when we return, digging into the way investors should be thinking about the vaccine rollout beginning tomorrow across the pond in the UK. Stay with us.
Alright, I guess I'm good for the day. I probably have to wait till something happens to get in another trade, but I think I'm good. Let's see, I got in Best Buy and Kellogg. So I should be straight. I may find another one, I don't know, but no rush, I'm good. Two is good enough.
Welcome back to Yahoo Finance Live. We are on the precipice of the rollout here in terms of the vaccine across the pond. It could begin tomorrow here, a little bit longer delay here in the U.S. as Dr. Fauci has always stressed the gold standard of testing and safety when it comes to rolling these things out here in the U.S. But overall, investors are continuing to try and calculate when the return to normal will come. We got the update from UBS looking at the market action we should expect off this return to normal, targeting about 4,100 in the S&P next year. For more on that return to normal, I want to bring on our next guest here with his thoughts on what investors should be thinking about. Anik Sen here is PineBridge Investments Global Head of Equities, and he joins us now. Mr. Sen, it's good to have you on here to chat. I guess first off, your expectations as we continue to track how long it's going to take for these vaccines to reach the public at mass here, to really reach that herd immunity. What's your expectations heading into next year?
Well, I'm no expert on the vaccine rollout, but I think I would go along with the consensus view is that by the first half of next year, we should have mass vaccinations around the world. I think that is the general market consensus following, what we've been hearing over the weekend from experts in the CDC and other areas.
And to Zach's point earlier, I mean, how much of that, the optimism coming through from the vaccine has already been priced into the market right now? I ask that because it's interesting to see last week we were talking so much about how the market is looking past the most recent surge we're seeing here in the U.S. And yet where you look at things are trading today, it does feel like that's still continuing to weigh on investors' minds, especially as we've got more and more states reimposing restrictions.
Well, this is, of course, the second, if not the third wave in many parts of the world. So I think the market has seen this movie before. And indeed, the market is looking through. Short term, of course, there are some uncertainties in terms of the trajectory of the pandemic. And short-term uncertainties in terms of the policy response. But I think the market is getting more comfortable that we should see a stimulus bill in the next few days, well before the year end. I think that is very badly needed as a lot of the past stimulus starts to expire. But I think, to your first question, how much is priced in? This market has been a very narrowly driven market this year by a handful number of stocks. In fact, indices around the world have become extremely concentrated. And what we've seen so far is that the entire market has been driven by a narrow group of mega cap stocks and a narrow group of visible growth stocks. So there is plenty of market opportunity left. We are very bullish about 2021. And we are in many ways approaching a number of tipping points where CEOs and CFOs of companies are now looking for the next several years in terms of being able to invest, not having been able to do very much literally for the last 3 or 4 years.
What's up, everybody? I'm back.
Yeah, Anik, I guess we were hearing.
So I got out my some trades, got on some new ones.
Confidence coming from the C-suite
so,
and how.
In case you're wondering what all this red come from, some new guys, I got out American Airlines, Gold, Becton Dickinson, and Teladoc. At some good prices. This is a bankruptcy play I'm doing. This company, I guess they were going bankrupt, but they got bought out by another company. So I only got like 12 shares, so it's nothing serious. I know you see negative 24%, but it's not as bad as it looks. It's a bankruptcy play I'm doing. I spend about $50. Company bought them out, so I'm just going to see if it's going to shoot up. Nothing else to do. It's only $50. I mean, what's $50? Apple. This is an investment play I got going on.
In the most recent days, but I think
this one I hit a real good spot. I thought it was a good time to invest. Citigroup, another investment play. Home Depot. I got into this one on Friday. I believe it was a good spot.
And
it was either there or
so much about,
here, but I don't think it would go here because of this pattern.
Just keep calling it that. But these names, like a Zoom, that have
this
really
one I just got
seen
in Kellogg,
huge upside this year as a result of this big shift
Best
towards
Buy, looking juicy, especially for Christmas. I know it's going to go up.
In that as
I'm
well.
going no place but
what
up.
are some names that you're particularly
Christmas, Hanukkah,
right now
all those other holidays.
Good value for investors, not those who have seen these huge.
This one's a short sell. I'm bidding against the market in case you guys don't know what that
but
means.
Ones that you think are really good opportunities.
You know, it's a great question, and we have been saying
Another
for a long time
science
that visualization
stock
is
I got
is a
into.
very, very
I got
important
into this
theme
one
across
last
so
week
many
as well.
industries.
It's just
You know,
moving
the
slow.
names that
I
we've been
mean, it's
talking
moving in the
about,
right
you know, are
direction, but
really
just slow. I'm
the
sure
kind
it'll
of the
pop up
obvious
eventually. It
names,
just takes a
the
little bit of
stay-at-home
patience.
beneficiaries.
Another
But
science
really,
stock, moving
digitalization has been
slow, but I'm
accelerated
sure
by
it'll
this
pop up
pandemic,
eventually.
and where companies have had, you know, let's call it 5-year plans.
So I'm doing good for now.
Those plans have been accelerated to an investment period, which is now relatively short over the next
I
2 to
could
3
get in one more
years.
stock,
So we think that across a
but
whole range of
I'm just
industries,
waiting.
digitalization
Just waiting.
is not just a nice to have, but it's almost become a mandatory imperative.
I don't see anything to get in right now.
In order to stay competitive, be competitive, and even stay in business over the long run.
I think my alert went off again. Oh, that's this one. I've already gotten into this,
We
so
think that digitalization will change their businesses, but it's
I'll
not just
delete
a
this.
sufficient condition. You know, it's a necessary
Then we
condition.
got Nicola. This one right here, I'm in on my Robinhood account.
The strength of the business, it goes hand in hand with the strength of the governance of those companies. So it's definitely an
I need to check my
important
Robinhood
aspect,
account.
but it is an aspect that I think will play through to very significant investments.
I got in
we
at
think
16,
really
already
very
at
short
19.
time
I'm
frame
already,
over the
I'm
next 3
already
years or
seeing
so.
daylight. So
Yeah, it will lead to a
let me
lot
see
of
what's
happy
going
investors
on
as well
here.
who've seen a huge return so far this year. Anik Sen, PineBridge Investments Global Head of Equities. It's good to talk to you today.
Thank you for having me. Bye.
And coming up, we're going to dig a little deeper into Zoom. From Zoom meeting to Zoom happy hours, the company has really changed the way we communicate throughout this pandemic. Dan Halley will bring us Yahoo Finance's Company of the Year after the break.
Oh, wow. I'm going to try my best to do this more often. All right, chat. I think the rest of the day, I think the rest of the market's gonna move kind of slow. So I don't think you guys want to just sit here and stare at charts all day. Hopefully you guys enjoyed the stream. If you did, like the stream, share the stream, follow the stream. Also, if you want to join my trade group, I have a group on my Facebook page that's called Stock Trading for Beginners. You can join that as well. If you got any questions, you can ask in the group. Only because, you know, I'm forming up a trading group or a trading team, so your question might be someone else's question. So it's good to ask in the group so we can all help each other. And if you got some stocks that you want to tell me about, if I got questions about, post it in the group as well, and I'll read it. All right, everybody. Getting off now.
No other company has had the kind of year Zoom
And
has
if you
had.
followed the
In a
trades
global
today,
pandemic that has shuttered huge swaths of the economy, driven millions out of
you're
work, and
welcome.
forced the term social distancing
And
into the